You're watching Trade of the Week with me, Zinati Kuma. This week we've got our eyes on gold with Gold Fields, Harmony Gold and Anglo Gold Ashanti in for analysis. Moxima Gama, senior technical analyst at the Money Hub, joins us now with her take of the stocks. Thank you so much for your time, Moxima. Let's actually start off with the overarching theme of gold. I don't know if I'm surprised or not that gold is still going, I would think, but actually I think I am surprised because I think a couple of weeks ago or maybe a month ago, people were starting to ask if they should be shorting gold. But it seems that if you did short gold, it was at your own peril.
Basically, and excuse me. So I should have brought a gold chart, but I thought it was going to take up too much time. So I've done analysis on gold. And so in technical analysis, you need to at least go right back to inception of the chart and see if there are any patterns that have done historically, because that's what we attest to, that whatever happened historically could happen in the future.
History
or in the
repeats
present.
itself.
Exactly. So I did analysis from then, and from like 2005 up to 2011, which is about 6 years.
Yes.
We saw gold rise quite substantially before it did a bit of a pullback. So it did a gradual pullback for about 9 years. You may not have felt it, but it was a gradual little downward trend, which then broke out in 2019. Now, if we follow from what has happened previously to currently, now that it's out of that long-term bear trend rather, then from the calculations, and I don't know if you remember me telling you of the Dow theory when where bull trends or bear trends go steeper over time. So from that, the predictions are gold could go to 3,440. That's what I see.
Wow.
It follows what it's done previously. And right now, it's really on the cusp of breaking out into a steeper bull trend, which is the third phase. Third phase is always steeper, always rushed. So, and it's the most delicious phase because you get your returns quite quicker than normal.
Yes.
And so I'm not surprised that it's kind of hovering at that 3,000 mark, because it's on a very key trend line that once breached, we can then see quickly, or well, I mean, let me not say quickly before everyone gets scared, but we could see that upward momentum, the third phase heading towards 3,440. Now that would be from 2019 to 2025. So it's a 6-year period. You remember from the previously it was 2005
to 2011,
that's a
and then a pullback of 9 years. And now we have this.
We may not have a pullback of 9 years, but I think once it's reached there, we could have a bit of a plateau. Also depending, and this is excluding any fundamentals, but if the geopolitical tensions continue, there might be a bit more, but this third phase would probably be like the last kicks of a dying horse. And it's the fastest, the most rapid, but it's also, so in most cases, a lot of excuse me, or hedge funds would then sell all the way up in the third phase. So they would push the price to go up, and and then the retail people start coming in because oh my God, the price is going, so gold price is shooting the roof. But then the hedge funds with bigger money would then start selling. That's why the third phase is usually the steepest. But after the third phase, you get that little drop. So that's what I see. From what has happened previously, we might be seeing that transpiring or coming to fruition this year. So it means within this year, we could possibly hit that 3,440 mark.
Amazing. I never thought that gold would be this exciting. And I think it's because it has these long periods of a gradual uptick and then a long period of a pullback. And then, so I guess it's never really that exciting within those periods. But when the trend changes, then that's when you really get the excitement.
So the first and the second phase are usually very gradual. It's that third phase that's quite steep.
Okay.
So we need to keep an eye on that one.
All right. Well, let's get into the gold counters. Of course, actually, we've had these gold counters pushing the JSE up so much so that we've had record highs. Yes. Yeah. All right. Well, let's get into Anglo Gold Ashanti. What is that looking like?
Okay. So the reason why, excuse me, something's in my throat. The reason why I looked at gold is because then the next question is how far will gold shares go if gold is going to go? Because there's that positive correlation. So if gold's going to go up, it's inevitable that the gold shares are also going to follow through. So we'll start off with Anglo Gold Ashanti, and I'll just mention that it has been, out of all the gold shares, just maintained a steady uptrend.
Yes.
All right. And so this uptrend that you're seeing now with that bold trend line is dated back to 2015. That trend obviously became steeper. As you know, the whole steeper, excuse me, the trend becomes steeper over time. But in that second phase, as you said, it's like a gradual, it's a movement upwards, but not an exciting type of movement, which is why we saw a lot of the choppiness within that second phase. The choppiness became even more prevalent when it started forming that symmetrical triangle. And when it breached that upper slope right there is when we saw this type of upside, specifically when it traded above 530. That confirmed a positive breakout of that symmetrical triangle, which is the reason why we're actually seeing this in technical analysis. This is what we would then account this upside to. And there's more upside because it has broken out of a long-term symmetrical triangle. So what we're seeing at this point is, excuse me, it is testing its all-time high at 637.35.
All right.
That's ANG's all-time high. Now it's a psychological level. And if it's a psychological level, most investors or traders would be like, okay, maybe it's time for it to pull back. So we are seeing a bit of a premature pullback with the RSI pulling back a little, which means we could see it maybe go, pull back to about 576. At most is what I am predicting. At most is where it could fall. But that's fine because then it gives people who haven't bought an opportunity to get in or to reload, right?
All right.
But in order for this uptrend to continue, it has to reverse in this little correction. It has to reverse above 576.
All right.
Because that will then, be the continuation of the uptrend, go back to its all-time high, breach that all-time high, and then from that symmetrical breakout, and how you measure where it will go or what the objective is from the symmetrical breakout is you look at the base of the triangle and you project it upwards.
All right.
And the projection there is that ANG would go to 723.80 cents. So we're already 14% in of that, right? But now with this pullback, it means we could then either reload or get in and then see it head through to the objective of that symmetrical triangle. Now, if it does breach that itself is from the breakout point there to there, it's meant to go up by 28%. We're already 14% in.
All right.
But if it does get, once it gets to that 723 mark, there's also another pattern that has formed that could extend that upside, and that extend upside to 818.60. And that pattern would be a double bottom pattern, which is a bullish continuation or a bullish reversal pattern, and that was recently confirmed at 576. So it could do a bit of a retest to there and then continue with its uptrend.
Right.
Now, of course, I'll always kind of on how you measure that upside is from the trough to the intermediate peak projected upwards. Now, of course, I'm going to mention the alternative scenario is that if it does trade below 576, then it means just hold on. Like, don't go long yet or don't reload because then it could pull back to about back to that 530 mark.
Yeah.
All right.
All right.
I mean, at most, I think it could go to 483. I really don't see that, but that's just,
But just to protect yourself.
Just to protect yourself, also to wait if at all it does breach those supports. It just means, okay, I'll get in a bit cheaper. But that is the bearish side of things. I really feel or believe it, or from what I see, if it does that retest from the double top, that it will kind of reverse back above 576 and then proceed with its upward movement. So that's with gold. So, that's seeing that upside, but at 570, just beware. Actually, that was supposed to be 576.
576, yeah.
Just beware of a bit of a correction that may happen, which just means hold on, just don't buy it because you can get it cheaper.
All right, all right. Well, let's move on to Gold Fields.
Gold Fields now,
and I think Gold Fields has been one of the laggards, if I'm not mistaken.
Yes.
Correlation to gold.
A bit of a lag, but it seems to be doing better than ANG because of that symmetrical triangle. But now with that upward break, we could see it. So with Gold Fields, though, it had been trading in a long-term bear trend, and it broke out recently. 2020 is when it broke out. So that is the first phase of its trend, and that's the second phase.
All right.
But effectively, it's been trading in a bull channel.
Okay.
So that's a very clear bull channel there. When it tested, because every time it tests the lower slope, it has a tendency to recover. So in recovering, that little downside, if you had followed my calls, you would have gotten in at around 260, 295. And now that's what propelled that upside to the upper slope. Now, can you see at the upper slope, it always has a tendency to reverse every time it sees that upper slope.
Yes.
But the correlation with gold, I don't think it would reverse to an extent that it usually does like that. So maybe there will be a bit of a pullback because psychologically it is testing the upper slope, and every investor or trader knows that upper slope usually is followed through by downside. I think at most it could fall to 359.55, and then once it keeps that as support, that could then attract buyers that could push Goldfields out of this channel and start the third phase.
All right.
All right. So once it's already disrespected the upper slope, so it means that there are buyers who are willing to push it back up, but it's just, I suppose, that psychological factor of its upper slope. So if it does breach that upper slope, the target was it's currently trading at 376, so target would be at 511.40. Now, how do I measure that? It is the width of the channel projected upwards from the breakout point. So that's what I'm seeing with Goldfields, provided that it trades above 385 and breaks through the upper slope, is when we could see that upside to, potentially see that upside to 511.40. Alternatively is that if it does trade below 359.55, then that could trigger start that correction. It also then means that you could get it cheaper. If it trades through 344, it could fall to 310.75. I think just looking at where the gold is going, I don't think it
doesn't
could fall
look like
that.
it would get there,
but just kind of wait on buying now because there's a bit of a correction. But as soon as it starts triggering or it starts trading above, let's just round it off to 360, you should then know that it's probably time to now get in again or reload.
All right.
Of course, I've mentioned the alternatives.
Yes.
So this is what the projection would be looking like. So it's a 34% move. Now, Anglo is, if it does go up to the double bottom target, it could go up by 28%. GFI, that is a 34% move. So there's decent upside from this. Specifically if the gold continues with its third phase, right?
Yes.
Now, when we move on to Harmony, it's also this, Harmony and Goldfields seem to be, they seem to be the same in the sense that they recently broke out of bear trends.
Yes.
But Harmony being the most recent, I mean, that only broke out in this year.
But I mean, hasn't that been stronger?
It's been, I wish I could have just dated back this. It has not necessarily been stronger. No, they've just been trotting along within the channels.
All right.
Now they need to break out of the channel to start a more distinctive move. Now with that recent breakout, as you can tell, it's in a bull channel. Every time it tests the lower slope, it has a tendency to go up to the upper slope. Upper slope, it has a tendency to reverse. But if it does breach, right now we are seeing that premature reversal, potentially down to 214.17. It should try and hold support there for it to then trade back upwards, breach that upper slope and above that 229.80 mark, and then head to its target at 295.90.
Yes.
All right. Now that is, it's not too far off, but this is the first phase. So Harmony could, as time goes on, there might be other targets that it will go to because it's just recently started its first phase. So that upside could last a bit longer than the others because it just broke out. Now how I measure that, as I mentioned with the previous one, it's the width of the channel projected upwards. So the alternative scenario is that if it trades through that 214.70, it means just wait. You can get it cheaper. Because then the downside could be towards 187.45. And because it bounces on the lower slope, it's likely to bounce again before it goes back upwards. So if it does fall below 214.70, hang 10. Okay. Just wait for it to pull back, and the time it then starts to recover, that's a good time to get in because, as I keep saying, you'd get it cheaper. It's like, for instance, going to a shop and they say, listen, if you come back in 2 days' time, it's 20% off. You're obviously going to come back in 2 days' time. So this is pretty much what we're doing, waiting for the sale before we get back in.
Before you get back in, because there's a lot of support for significant upside.
For significant upside, and upside that is over 20%. So it would make a good investment. And as I said, if that third phase of the gold goes through, these could rapidly reach the that.
So interesting. So just give us a quick summary of Harmony there.
So harmony there would be, so it's about 29%. If it once it's, from the breakout point would be 229.80 to 229 would be 90%. But if it trades below 13, 14, we could get a 13% discount.
Okay.
Before you can get in again. So that would be your key to just hold up. But if it holds above there, then it's not going to pull back that far. Then it's just going to continue with its uptrend. So the full summary would be this.
Absolutely amazing.
Can you see those percentages? They're pretty juicy. It's not too late to get in. But if, as I said, if they breach the supports, these are the discounted rates you can get in if they do breach those key support levels. Otherwise, if they don't, you should just...
What do they say? Everything that glitters is gold.
This is glittering gold.
Indeed,
they say it's not gold, but this is glittering. This is literally glittering,
It is absolutely amazing to see, just the uptrend that we have seen in gold, and the fact that it is still continuing, even though there have been murmurs of people shorting or trying to short the miners.
If they do, they will they'll shoot themselves in the foot, because also you have to, if I have to put the fundamentals in this geopoliticalness, gold becomes a safe haven.
Yeah, true.
So if there's all of this happening, you're like, let me just buy gold. Let me buy jewelry. Let me buy whatever physical gold, which then pushes the share price up, despite the dollar actually pulling back and the rand strengthening. So there seems to be a huge demand for gold. And I wouldn't want you to miss out on that.
All right. Well, we definitely will not be missing out. Thank you so much for your time and for your insights there, Moxima. That was the Money Hub's Moxima Gama. And that's all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.